have just come into 10 lakh, maybe from a bonus, a matured FD, or an inheritance. But now what? Do you let it sit in your bank account losing value to inflation, or do you make it work harder for your future? Let's break it down how to invest the 10 lakhs wisely based on your timeline, goals, and risk tolerance. Hi, welcome to holisticinvestment.in, where we simplify the world of personal finance for individual investors like you. So let's bust a common myth right away. There's no one size fits all investment. Google might show you the top funds of the year, but blindly following those picks without understanding your needs can be a recipe for regret. So the right investment depends on three personal factors: your time horizon, your investment goal, and your risk appetite. Once you have clarity on these, the rest becomes simple. Whether you need the money in 1 year or 10, your strategy should reflect that. So here's a personalized breakdown. If your time horizon is less than 1 year, then your goal might be capital safety. So your option could be liquid mutual funds, high interest bank accounts, but do avoid stocks or equity funds because they are too volatile for your short term needs. But if your investment time horizon is for 1 to 3 years, then your goal must be stability with better than savings returns. So your option could be short duration debt funds and corporate bond funds. And if your time horizon is 3 to 5 years, then your goal must be balanced growth. And your option could be conservative hybrid funds or equity savings funds. Why? Because it offers exposure to equity plus cushion of debt. And if your time horizon is somewhere between 5 to 7 years, then your goal must be long-term growth with some volatility tolerance. So your options are aggressive hybrid funds, flexi-cap funds. And if your time horizon is for 7 plus years, then your goal is wealth creation. So your option could be mid-cap, flexi-cap, or even small cap funds only if you can handle the market swings. So should you invest all 10 lakhs at once? The answer: not always. Dumping the full amount into equity in one go can backfire if the market dips right after. Instead, use an STP, systematic transfer plan, to invest gradually. So step 1, park your 10 lakhs in a liquid fund. Step 2, use STP to move small amounts monthly into an equity or hybrid fund over 6 to 12 months. This approach smoothens your entry point and reduces the risk of market timing. So you have invested the right way. But now what? Markets will go up. They will also go down. But what separates smart investors from anxious ones? Staying the course. Because many investors panic during a dip and withdraw, locking in their losses. So remember, markets reward patience, not panic. And compounding needs time, not timing. So there is a bonus thumb rule for lump sum investment. That is, if you're unsure how long to stagger your 10 lakhs investment, use this as a guide. So if it took you a year to earn it, spread investments over 6 months. But if it's a sudden windfall like inheritance, property sale, then stretch it over 1 to 3 years via STP. This way you balance opportunity with caution. But do you have big ticket expenses coming up like wedding, education, home interiors? Then capital protection is the name of the game. So consider safer options like liquid mutual funds, short duration debt funds, and fixed deposits for ultra conservative investors. Don't chase double-digit returns if you can't afford a short-term dip. So can you invest the entire 10 lakhs in mutual funds? Technically yes, but should you? That depends. Like, ask yourself, is this money for an emergency? Will you need it in a year? Or is it for retirement, like 20 years later? Each answer gives you a different fund type, investment method like lump sum versus STP, and exit strategy. So don't copy someone else's portfolio because personalization is power. Are you someone who checks your portfolio daily and panics at red numbers? Then stick to conservative or hybrid funds because your risk appetite shapes everything. For example, if you can stay calm during a 20% market dip, then you might be suited for equity heavy allocation. vacations. So knowing your risk tolerance isn't about courage, it's about emotional fit. Portfolio that matches your temperament is one you will actually stick to. And don't let taxes into your hard-earned returns. Invest smart. So you can use ELSS funds for Section 80C tax benefits, like which has 1.5 lakh limit, and you can also leverage your debt funds with indexation for lower tax outgo, and time your exits to minimize capital gains tax. So would you rather earn 10% and lose 30% to taxes, or earn 8% and retain most of it? Tax efficiency is equal to higher actual return. So what is the final takeaway from this video? We have covered a lot in this video, like from time horizons to tax strategies. But if you're still thinking, is this truly the right decision for my life goals? That's where a CFP steps in. A certified financial planner helps you to build a portfolio that aligns with your dreams, and to avoid mistakes that drain your money over time, and to create tax optimized goal-based strategies, and monitor, adjust, and grow through every life stage. So if 10 lakhs can be life changing, but only if you use it right. So invest based on your timeline, use STP for market linked investment, prioritize safety for short term goals. Factor in your risk appetite, plan with tax efficiency in mind, and most importantly, click the link in our description for a free consultation with one of our certified financial planner today. Let's not leave your money idle, or worse, misplaced. So make your 10 lakhs work harder and make it work for you. And I will see you in the next video with much more interesting financial insights like this. Until then, like, share, and subscribe to our YouTube channel. Thank you for watching.
And you can definitely check out the blog post we have posted on our website through the link in the description. And if you want to gain more professional guidance through a professional financial planner, you can choose to book a one-on-one complimentary consultation with one of our professional financial planner through the link in the description. Also, if you want to gain more investment and financial insights through the leading experts in the finance industry, we also conduct regularly free live webinars through which you can register and gain these insights. The link is in the description. Also, if you like this video, definitely hit like and subscribe to our YouTube channel so we can come up with more such financially beneficial content for you. Thank you for watching.